We just heard how the markets may be anticipating this deal. Is that because, in fact, if this deal goes forward on the sorts of terms we've talked about, we have sort of general understanding, if it goes forward, we'll actually be better off, that is to say, not just better off than having a war, but actually better off than when we started?
Well, so obviously it would close the deficit, right? It would close the deficit a little bit.
Trade deficit.
Right. And that's an important piece that we're kind of, again, battle's won, not the war. But really what we're still after is that intellectual property piece. And that's still a question mark that I think we need to wait and see what's actually going to happen.
And what does it do to the dollar? We had actually a viewer send an IB in asking you, what does it do to the dollar as a practical matter? And is there a risk actually that it'll heat the economy and it'll cause the Fed to come back and raise rates again?
So backing up a little bit, what's going to happen here, I mean, the economy, I think, is already getting ready for a trade deal. The market's already kind of pricing in a positive outcome here. So it'll be less of a climactic event if we actually get a deal. I think the bigger risk is if we don't get a deal, because the market's kind of catching up to that. The dollar is an interesting piece that I think has been a head scratcher for a lot of people this year, because what you're seeing is the Fed on pause. You would expect the dollar to depreciate a little bit, but because there's so few other options out there, sentiment has driven people back into the dollar, so it's kept it propped up. So I would expect that the dollar stays relatively strong for the first half of this year, and then later in the year, because we do see the Fed still having to hike once, maybe twice if we upside surprise, then the dollar, who knows what's going to happen.
So, Nancy, weigh in on an individual company level. Today, when you woke up this morning or yesterday, were there any stocks that were more interesting to you than on Friday?
Not yesterday or today necessarily, but in December, we anticipated that China was strengthening. And so then, Alex, at that point, we added in Tiffany, which would benefit from a improving Chinese consumer. We added some semis through Broadcom, and we added some cloud play with strong exposure to China, which would include Salesforce.com.
So was that more of there's a China put, we've seen the bottom in the economy, things are going to get better in China, or is that more like U.S. China won't fall out of bed, it will be okay?
It was both, actually, but China is global growth. So if we didn't have an improving China, and the country has eased dramatically. Today we saw more news and we saw increased lending in January. So these are all things, there are about 70 eases in the second half of the year, not just taxes and not just monetary policy, but reserves, et cetera. And so we anticipate that China's going to be stronger in the second half, and we also think the market has been pricing in a deal. So we've benefited from that, but we would expect to see a little bit more.
So, Nancy, you really focus on consumer, the U.S. consumer quite a bit, and consumer discretionary. Does this have any effect on that at all? What happens with China?
Yeah, I mean, like, look at a company like Starbucks. It has been in China for 20 years. They've seen 18% unit growth, but that's through store openings, just 1% in terms of actual organic growth. So if we see some easing with the China relationship, I think the Chinese consumer will return to Starbucks. Yes, there's a lot of competition. We're aware of that. But we think there's a number of companies that we own, Tiffany's another one, that will benefit Apple from an improved consumer.